Welcome to Bloomberg Technology. I'm Emily Chang, currently sheltering in place in San Francisco. What goes up must come down. Markets taking a dip today after reports circulated that the widely cheered news from Moderna that its vaccine showed really positive progress wasn't quite the full picture. Vaccine experts saying Moderna needs a lot more data to prove that its vaccine works. We're going to be speaking about this further when I speak to the founder of another pharma company, Inovio, that's also working on a COVID-19 vaccine candidate a little bit later in the show. Meantime, Fed Chair Jay Powell telling a Senate panel, reiterating that the Fed plans to use all the weapons in its arsenal to help prop up the U.S. economy through the coronavirus pandemic. To give us a breakdown of the day when it comes to equities, I want to bring in Bloomberg's markets reporter Taylor Riggs, who's been following all the action. And Taylor, tech returning as the leader today despite the overall drop. What drove that?
Yes, it was interesting that really just before the last 2 hours of trading, most of the equities were all in the green, and you had FANGs and big tech and really the NASDAQ sort of leading those gains and getting back to that leadership that you and I have been talking about in the last few days that has been missing. Then in the final few hours of trading, everything sort of turned red. And you mentioned, of course, the Moderna vaccine and that the study we got yesterday might not have been as clear as it could have been. Maybe it didn't produce enough critical data. And in science, you want data, not words. And a lot of scientists were coming out saying that this was a lot of words, but they didn't really get the underlying data that you wanted. Still, tech did resume today's, providing some defensiveness here. And then as you'll see there, the FANGs actually coming out and being the only major indice still here in the green. So this is a little bit of a shift that we've seen relative to some of the previous days.
Now, Amazon set a high bar with retail results. Walmart earnings now out. How did they stack up?
So this has been the bull and the bear case, right? Amazon set a really high bar, and everyone was really wondering in this pandemic, could a company like a Walmart really keep up? Well, as has been the case in the last several quarters, they are keeping up. Their online sales jumped 74%, and they're benefiting as well as Amazon from a lot of the consumer stockpiling that was going on, buying some of those staples in March and April, for example. Also, to counter Amazon's Prime service, Walmart is now rolling out a subscription-based grocery delivery offering, and they've recently introduced a 2-hour home delivery service in some markets. If that sounds familiar, it should be, because they're taking a playbook out of Amazon's book to really try to compete with the company. They also did come out and say that the online pickup and delivery business increased fourfold during that March period, and it also brought in many new customers, many of whom had never shopped online before. So Walmart really holding its own here, and again, proving to be a very formidable competitor to companies like Amazon.
Meantime, chips outperforming today. What was driving that, Taylor, especially given the continued back and forth between the U.S. and China?
So as we know, chip makers do get a lot of their revenue, sometimes as much as 50-70% from China. So typically this sector and this index can be a gauge on how healthy or not healthy the U.S. and China relationships are going. Interestingly enough, this was a good day for the chips, despite ending up in the red, only off about 0.4%. Nvidia hit a record high before their earnings. A lot of analysts on the street were positive about them, including analysts from BMO, who said that they will continue to benefit from the shift to this new computer landscape. There's also some reports that 5G as well will be boosting Qualcomm. So even with some of the rising tensions between the U.S. and China that you saw today, even the Chinese tech stocks like the CQQQ ETF outperformed the QQQ ETF, which tracks U.S.-based companies. You had Baidu, for example, really leading after they're seeing improving ad demand. So really a case day when some of the Chinese technology stocks were some of the clear outperformers.
All right, Taylor, thanks so much for breaking it down for us. To talk more about the U.S. and China, despite a tentative agreement between the U.S. and China on trade and other issues, what seemed like a détente pre-pandemic has now since been exploded. Of course, we know President Trump has been recently blaming China for the coronavirus outbreak, and now the U.S. has put additional restrictions on the Chinese telecom giant Huawei, basically banning any chip maker that uses U.S. equipment from selling to Huawei. I want to bring in Anya Manuel, the co-founder of the consulting firm Rice, Hadley, Gates and Manuel, and an expert on U.S.-China relations. Anya, thank you so much for joining us. Let's take a look at the big picture. How would you describe U.S.-China relations right now? I mean, what happened from where we were 2 months ago?
Thanks for having me, Emily. Exactly as you said, we had found a detente. There was a phase one trade deal. Even if it hadn't gone further, that was promising. And now, since the COVID pandemic, relations have just fallen off a cliff. We are really in free fall. And what you just mentioned on Huawei is one perfect example of that. I'll give you another. There was a recent Pew poll that said 2/3 of Americans have a negative view of China, which is up nearly 20% since 2017. And the two presidential campaigns, as you know, seem to be outdoing each other on how tough they can be on China. So this is truly difficult times.
Now, the issues run very deep here, especially given that we're in the middle of a global health crisis. U.S. intelligence has concluded that China lied about the extent of the coronavirus outbreak there. You know, do you believe that? And if so, is that grounds for a more contentious relationship with China?
I don't have access to intelligence anymore, but I have no doubt, no reason to disbelieve what our intel community is saying. Certainly, an authoritarian regime like China's isn't likely to be as forthcoming as they might be on these things. Yes, there is some reason for tougher relations with China. They certainly weren't very clear on the COVID crisis, but frankly, some of this is manufactured by both sides, and I think we're getting into quite dangerous territory. On the U.S. side, we seem to be taking
let's talk about the Huawei
defensive stances.
So let's talk about the Huawei curbs. You know, Huawei has said, you know, this is pernicious, this is arbitrary. What do you think? Is it unfair?
Huawei is a bad actor. There's a lot of intelligence suggesting that they're very close to the Chinese military and to Chinese intel. But this particular export controls that you just mentioned really seems designed to put Huawei out of business. So it is quite draconian. In the previous segment, you said many U.S. semiconductors rely for much of their revenue from China and from Huawei. So this has a huge negative impact on our own industry and, frankly, on our ability to do more research and development and stay in the lead. And, you know, I don't think the Chinese are going to take this laying down. They're already threatening, again, to come out with a, quote, unreliable entities list, and will likely make trouble for Cisco, Apple, for some of our American tech companies that have a lot of business in China.
Now, one of the concerns is how the United States continues to compete technologically with China. How does the U.S. compete if we're in the middle of this outbreak and a giant economic crisis, whereas China now seems to be out of the outbreak and on the mend?
Yes, it is starting to come to be on the mend, but I think it's going to be slower than certainly the Chinese government hopes, just as our recovery will likely be slow. On the U.S. side, we've been dealing with this tech race with China almost entirely defensively, doing things like keeping Chinese investments out and trying to keep our technology in. My view is that we would be better served playing offense, to focus on what the U.S. and Europe can do to put our own house in order to compete effectively and to work together, not alone. I mean, there's so many things we can do to help research and development, basic science, to help promote education in science and technology in the United States that wouldn't be tearing China down, but that would be building ourselves up.
Now, the White House has tried to get ahead of this issue, for example, by encouraging or, let's say, pushing U.S. chip makers to have their chips built and manufactured in the United States. Taiwan Semiconductor is now doubling down on a $12 billion factory in Arizona. What is the right tact from the administration and from the next administration, should there be a next administration?
Yeah, I'm glad you mentioned that, Emily, because that really is a big deal, that TSMC, which is one of the foremost chip manufacturers based in Taiwan, very close to mainland China, a country, we would say a region, Beijing would say that they're trying to reincorporate. So the fact that TSMC is going to manufacture their most advanced chips in the coming years in the United States is a really positive development. And along the lines I was saying, it's being positive in building up our own capabilities rather than just trying to push China down. So all good from my perspective.
All right, Anya Manuel, always good to have your perspective on this show. Co-founder of Rice Hadley Gates and Manuel, the consulting firm. Thank you so much for joining us. Coming up, we're going to talk about the race to a COVID-19 vaccine. We're going to hear from Dr. David Weiner, the co-founder of Inovio, that's working on its own COVID vaccine. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. Well, Inovio was the second pharma company to enter its COVID vaccine candidate into human trials. This, of course, after Moderna announced some positive news yesterday that its vaccine candidate appeared to be safe in humans and produced the desired immune response. Just how promising those developments have been has been in dispute today. Let's first talk to Inovio about how promising their vaccine candidate is developing so far. Joining me now on the phone, Dr. David Weiner, the co-founder of Inovio and YSTAR's Vaccine and Immunotherapy Center Director. Dr. Weiner, thank you so much for joining us back here on the show. Let's start with Inovio. You told us about a month ago where progress had been. Since then, what is the latest update? You've been testing the vaccine on humans. How is it going so far?
Well, thank you for inviting me. So the Inovio vaccine is now fully enrolled in trial, and all people are fully enrolled. There have been no serious adverse events in any person in the trial that I'm aware of. And the Inovio has announced it will produce the first data from this trial as far as the immunogenicity in June. So that's the current update on the status of the trial. Separately, data was released from a MERS, Middle Eastern Respiratory Syndrome trial last week by collaboration led by Inovio in humans, where they reported safety in all of the people in that trial, and antibodies and neutralizing antibodies and CTLs were induced in people in that trial, in about 60 people.
So what is your take on this Moderna news that's now being disputed? Obviously, the company only tested it on about 8 people. They did see the desired results, but now you have a lot of different experts out there saying this is not nearly good enough and not as good as it might sound.
Well, I have not really seen the data presented, so it's a little hard to comment. They apparently released data on a subset. They also reported that some people had grade 3 events in the highest dose group, and I guess what Moderna is doing, they're now focusing down on adding another dose group at 50 micrograms to get more experience with that dose. So I think we're going to have to follow this and see how it plays out. I'm very excited they presented some data, or at least discussed their data, and I guess we'll eventually get to see the full data presented and can evaluate it in detail at that time.
Now, everybody is just dying for good news here. When do you believe, based on the progress you have made and what you're seeing out there, when do you believe a safe vaccine will be widely available in the United States and around the world?
So I think different groups have been announcing their plans. Like you mentioned Moderna, they plan on doing expanded studies sort of in June as well, I believe. And Inovio has stated that they're going to be moving to efficacy studies in the summer. And I think you've also heard from Novavax that they're just entering the clinic, and they're also targeting expanded studies towards the end of the summer. And then we'll see studies from some of the other groups. Oxford, of course, has started in the clinic and is ramping up. And then we will see studies from Janssen as well. So I think we're going to start to see a lot of different data. And we do have several of the different groups in China who are in trials, and we haven't really heard how those are going. And so we'll start to see a lot of different data. And these platforms encompass sort of older technologies, an activated virus plus adjuvant, as well as all of these relatively newer technologies, and then sort of a protein with adjuvant technology of Novavax, and then, of course, recombinant adeno. So you're seeing many different platforms and many different types of technologies, and some of them, the RNA is a little more limited, but the DNA and the adenos and the pox viruses and recombinant proteins and inactivated, certainly we've seen many thousands of people studied over the last few years. So we will get to see how those come out. And most of those were studied
So does
for,
that mean, Doctor, Doctor, we might see a vaccine before the end of the year, or will it be next year, or will it be beyond that?
So if I were aspirational, I would say as we start to see these groups go to efficacy trials, we should start seeing.
It sounds like we've lost David Wayner there, the co-founder of Inovio, just as he was planning to give us a bit of a reality check on the timeline for a vaccine. Dr. David Wayner there, co-founder of Inovio, working on their own COVID-19 vaccine candidate there. We'll try to get you some answers on how he was going to finish that sentence. Meantime, coming up, we're going to be talking about Disney and TikTok. TikTok poaching a huge executive from Disney who was in charge of Disney's streaming services. We'll talk about TikTok's new CEO, what it means, coming up. Disney lost its top streaming executive to TikTok, the up-and-coming app where users post and share short-form videos. Kevin Mayer leaving to become the CEO of TikTok. He'll also become the COO of ByteDance, the parent company of TikTok. Joining us now to tell us more about what this all means, Sarah Fryer, who covers social media for us. So obviously this is a huge get for TikTok. TikTok has really been sort of a winner in this pandemic. What does this actually mean in terms of the company's ambitions?
Well, we can see TikTok becoming more of a media company. They have been working on TV shows. They've been working on music deals. They've been working on cultivating their talent on TikTok to get them paired with advertisers for branding deals. So we really could see a lot more investment in that with Kevin Mayer's background. I think another important aspect of this is, this company has been under scrutiny by the U.S. government because of its Chinese ownership. And Kevin Mayer comes from Disney, which is, the most American company there is probably. And it remains to be seen whether that is going to help TikTok in those relationships in Washington and in the skepticism that regulators have about the company.
Now, when we were speaking with Sheryl Sandberg, the COO of Facebook yesterday, she cited TikTok as a reason that Facebook shouldn't be broken up and the rapid rise of TikTok. This is something they have also told U.S. Congress. I mean, just how much wind does TikTok have at its back right now? And in terms of posing a real credible threat to Facebook and Instagram, which we haven't really seen.
Well, TikTok is a very different kind of platform than Facebook and Instagram. It's not a traditional social network. It's more of a content network. It's more like, I would say it's more of a direct competitor to YouTube or to Instagram Live or to any sort of like place where you are following creators. Certainly people create their own content on TikTok, but it's not a friend network the way of Instagram and Facebook. And I do think that Facebook still has the majority of social media, the way we understand social media and those kinds of connections and messaging. But TikTok is certainly formidable. They have more than 1 billion users between TikTok and Douyin, the Chinese version of the app. These do not break out the U.S. users, but it's gaining steam rapidly, and partially because the company has spent so much money, ByteDance has spent so much money promoting TikTok on Facebook and on Snapchat in advertising.
All right. Now, moving on, I do want to get your thoughts quickly on a story that's crossed the wire, across the terminal, that Apple is now buying older shows for its Apple TV Plus service, stepping up competition with Netflix, stepping up competition with Disney Plus. Tell us more about this.
Well, it's a bit of a change in strategy for Apple, but I think the important factor here is there is not a lot of original programming that can get made right now. We still have a lot of shelter in place, especially in LA and California, where a lot of the Hollywood studios are. And so I think that it is going to be safer if you're trying to build out the future of your streaming service to rely on shows that have already been made and bulk up the catalog that way. So I think that it may just be a hedge against the fact that we can't create new content as easily.
And full circle, how big a loss is it for Disney that they've lost Kevin Mayer in the middle of a big crisis for the company?
Well, they really had two ways they could have gone with it, and they ended up going with Bob Chapek for CEO as opposed to Kevin Mayer. And Kevin is the one who has the background in streaming and in building up the online presence. Of course, that is what's saving Disney right now, since people can't go to parks. So it could be troubling for them.
And the way forward. Okay, Sarah Fryer for us. Thank you so much for that update, Sarah. Coming up, podcast streaming and entertainment booming on iHeartMedia. We're going to speak to the CEO of the company next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Well, streaming and even radio and podcasts seem to be booming despite the fact that we are in the middle of a pandemic. Data from Nielsen shows that 28% of American adults are spending more time listening to the radio during this time. Right now, we are joined by iHeartMedia Chair and CEO Bob Pitman. And just a quick disclaimer, Bloomberg Radio does provide programming to iHeartMedia and operates New AM through a local marketing agreement in San Francisco. Bob, thank you so much for joining us. It's good to have you back on Bloomberg. So talk to us about the trends that you're seeing when it comes to listening and people seeming to be hungry for audio content.
Well, it's funny for us. It's a tale of two cities. Advertising's down, but the consumer is probably more engaged with radio than they ever been. They come to us in time of crisis, because what we provide really is companionship. They're hanging out with them. We give them information. We keep them calm. We keep them company. And they're finding us on all these new devices, too. About 10 years ago, we started this idea of being where our listeners are with the products and services they expected. So it's now got us on 250 platforms in addition to AM, FM, and they're discovering them a lot now that they're in their homes. Smart TVs, smart speakers, gaming consoles, Roku, and more. And I think for us, that's opening up this whole new world of engaging with the consumer, as well as really deepening that relationship with them.
Now, what about podcasts? On one hand, we've heard podcast listening is down because we're not commuting, and that is prime podcast time. But you actually recently said that podcast listening was up.
Yeah, in March, we were one of two companies that saw an increase in podcast listening, we and the New York Times. And I think it's because we've got this relationship with podcasting and radio so that the two are really tied together. So we can promote the podcasts that are going to be most relevant where people are. So as they shifted perhaps from commuting to at home, they shifted genres they were listening to and perhaps different podcasts. But the net result was it was up for us. And we continue to see this real strength in podcasting. And in podcasting, unlike probably the rest of media, the advertising sales continues to be strong. And, every time we go through a downturn, there's always some new product which grows during that downturn. In 08, 09, it was social. And today it looks like it's podcasting.
You've sponsored a number of different relief efforts, artists performing in their living rooms. You're also carrying commencement speeches by Bill and Melinda Gates, Tim Cook, John Legend. Talk to us about what's happening in new content. Obviously, it's limited, but there's also new opportunities.
Yeah, we've sort of looked at everything we do and we said, okay, the consumers changed. They have a different need from us. We got to step up and be there for them. So on the event side of things, instead of putting on these physical events, we said, we'll do the virtual events. And we the big experiment was with Fox when we did this living room concert for America on Fox. And we tried, will it really work? Shooting people in their homes with an iPhone and hosted by Elton John. It turned out to be a very big hit on the TV, but probably more significantly raised about $15 million for Feeding America. So that gave us a taste of it. We went on to build out the First Responder Fridays with AT&T. We did the State Farm living room concerts on Wednesday night. As you mentioned, we're doing podcast and radio with commencement speeches for the class of 2020. We did a virtual prom for the kids that aren't getting their prom. Dua Lipa was the host of it. And so we're reimagining events for a life of being stuck at home. And we've had great response to it, and I think performed a valuable service for our consumers. We've also tweaked the product on air. The first few weeks, people were dying for information about COVID. Today, they're sort of looking for information about what's next. How do we re-enter the world? So I've never seen attitudes and needs change more on a daily basis than I am now. For our programming group, we monitor these consumer trends daily. And it's sort of amazing to look at. And our job is to make sure we don't get stuck, but we stay right with that consumer with the products they're looking for from us.
Now, that said, we're in the middle of not just a health crisis, but an economic crisis with no end in sight. You've got advertisers pulling back. What does that mean for broadcast radio? Do they come back when the economy comes back, if the economy comes back?
Well, I think the good news is the economy seems to always come back no matter how dark things look at these downturns. And I've lived through them starting back in 1987. And I think radio, is going to prove its value here because it turns out that it is what people need right now. It's engagement. Coming out of this, they're going to need that kind of information, that companionship, that comfort to help them through it. And I think advertisers have discovered, over the last couple of years, there seems to be a real renaissance of audio. And I think that I would suspect that trend continues. It's deep now, as it is for all of the media players with advertising. But I think we're adding new products and services again for our advertisers, data, analytics. And when you compare the price of it to their other options for impact, very important. And the last thing, of course, is that coming out of this, every advertiser has to almost re-engage their brand with the consumer. So they really need this reach that we have. We now have more reach than TV, and they need that kind of engaged, trusted voice to explain what the product means today in this new world as we're coming out of it. So I think we probably fit the bill better today in this new world than we have in quite a long time.
Now, I recently interviewed Spotify CEO Daniel Ek, who is intent on capturing more listeners from radio and more advertisers from radio, given the multi-billion-dollar opportunity. How concerned are you about that?
Well, he's really in a different sector of audio than we're in. There are really two sectors there always have been. There's radio and there's the music collection. Music collection used to be your stack of CDs, and he's that today. And it's valuable to people. but you use your music collection when you want to escape the world. You use radio for companionship, almost the mirror image of it. And indeed, through this pandemic, you've seen actually the music collection usage go down, radio go up, because people really need the companionship. So I don't think we operate in the same sector. I can understand why he would like to be in our sector, because we have nice, healthy margins versus sort of the retail margin of the music retailer, which he is today, where most of the margin, most of the value goes to the music companies, because at the end of the day, it's really their content that a Spotify is selling.
Now, you've canceled some of your live music events, and obviously we don't know when that kind of behavior, a live concert where you've got hundreds and thousands of people gathering in one place, when that will ever happen again. I mean, will that ever happen again? And when? What's your outlook on, what has historically been such an important experience for artists and musicians?
Well, certainly it will happen again. But I do think they're going through a real lull now, and people aren't comfortable going out. They really don't even have opportunities to go out. I think what becomes important for the artist right now is they need to stay connected to their fans. And so we've made an extra effort working with the record companies, with the managers, with the artists, to try and come up with events and ways that the artist can stay connected with the consumer, interviews, virtual events, et cetera, to tide them over until that moment when they can open the doors again and fans do come in and buy the tickets again.
Now, iHeartMedia has certainly had its financial struggles, and you've bounced back, you've restructured. Given that we're in the middle of a pandemic and so much is changing, how would you describe your financial and strategic position in the midst of all of this uncertainty?
Well, we responded quickly. I mean, I've been through these things before. And it's very important. I think we're a high fixed cost business, which gives us a fantastic operating leverage. But on the downside, that means we have to reduce fixed cost. We did it. We announced that before this was happening, we were going through a modernization effort and had found $50 million we were going to take out in expenses this year. We found another $200 million on top of that. We have a good cash position, and again, feel like through the scenarios we've examined, gives us adequate liquidity and comfort there. And so from that standpoint, it's a matter of being careful where we invest our money, make sure we're spending it wisely, and continuing to build back the advertising with the relationships we have with our advertising partners.
Given your long history in the new media business, going all the way back to MTV, I'd love to get your thoughts on Kevin Mayer going over to TikTok, Disney losing a top streaming executive, and this up-and-coming app essentially getting a top streaming executive. What are your thoughts?
Well, it's funny when new businesses start out, whether it's MTV or AOL or Google or Facebook or TikTok, they seem very small at first, and people go, "Wow, my goodness, Kevin going to TikTok." But you never know how big TikTok can become. If he said, "I'm going to Facebook," you say, "Wow, it's a huge company." But at a certain moment, if you went to Facebook, it wasn't viewed that way. So I think Kevin is probably really smart. He sees the future. He's investing in the future. TikTok is reaching out to grab a really seasoned executive, which I think they'll probably find will help them maximize the value of what they've got. And they've got such a great start and so much momentum now. I think with the right executive, the right team, they'll accelerate that momentum.
All right, Bob Pitman, CEO and chair of iHeartMedia. Always good to have you on Bloomberg, Bob. Thank you so much for stopping by.
Thank you. Love being here. Thanks.
Thank you. All right, coming up, we will look at how one New York tech accelerator is getting people back to the office socially distanced using technology. That story is next. This is Bloomberg. The New York-based tech accelerator New Lab has been quite busy during the pandemic. First, we brought you the story about how they hacked together a low-cost ventilator when ventilators were needed. Now they are hoping to help get employees back to the office safely using technology. New Lab is now touting a newly designed wearable sensor that can help keep social distancing in check. Joining me now on the phone, the CEO of New Lab, Stewart. Sean, thank you so much for joining us. So talk to us about how the technology actually works and keeps people safe.
Yeah, thanks for having us, Emily. Yeah, we had to look at how to bring back about 800 different entrepreneurs and technologists that are based at New Lab. But as you mentioned, we've been working on a range of essential projects regarding ventilators and face shields, other forms of PPE. And so that was a community of about 75 people that we needed to bring back to the New Lab facility, which is labs and equipment they need on a daily basis. And so we had to build the right protocol to do so in a safe and responsible manner. And so first there was operational pieces like distancing and making sure seats were spread apart and conference rooms had lower maximum occupancy. But the technology piece was where it got interesting, as you mentioned. We worked with Strong Arm Technologies, one of the New Lab companies, one of 150 companies based here at New Lab. And they've developed a wearable sensor that helps both with, at the moment, kind of social distancing feedback. So it provides haptic feedback, vibrations, and lights to tell you if you're coming within a certain distance of another person within the workplace, but also allows some pretty helpful contact tracing, historically looking back at an employee's movement in the space if they do become ill, to identify not only where they went that would require additional deep cleaning, but also who they interacted with, so that you can quarantine not only the first person with symptoms, but also the people who interacted with that person during their time.
So how effective has it actually been in practical use?
Well, so far, it's a range of different protocols that have all come together to be a very effective return-to-work strategy for us. They fill out questionnaires before they arrive, then they have their temperature taken upon arrival with a contactless thermometer. Then they pick up one of these sensors and wear it just throughout the time while they're in the building. And so it's helped us understand a range of different things, like choke points of where people are actually congregating in groups, where we need to make a better operational footprint plan to ensure the crowds don't gather. But also, we've been able to see which of the 75 people are most at risk, who is not maintaining social distancing, who is interacting with people at close distances more often, so that we don't have to go and kind of work with everyone in that population, but can identify the people who are at the most at risk of contaminating or passing on COVID-19.
Now, how could this technology, if it indeed is effective, how could this be deployed? I mean, I imagine it could be used in warehouses and all different kinds of scenarios to sort of keep workers in check. I mean, what is the vision for how this rolls out?
That's exactly right. We're certainly not doing this for profit. This is costing us money to operate, to bring on EMT staff. But what we're trying to do is learn how we could educate and inform other businesses that have a similar construct to New Lab. New Lab's an 84,000 square foot building in the Brooklyn Navy Yard, has a lot of similarities to workplaces, but also factories and in kind of the industrial athletes locations that you mentioned. And so we're trying to gather as many insights from this pilot with a small community, a small employee base, so that we can help other New York State and nationwide businesses return in a safe and healthy manner.
Now, Sean, earlier in the show, I was speaking with Dr. David Weiner of Inovio, a company that's working on its own COVID-19 vaccine candidate, and we got cut off just as he was about to say when he believes a vaccine will be achieved and more widely in use. He said he believes, he just wrote in that he believes before the end of the year we'll see emergency use cases of a vaccine for people like frontline health providers, but it's going to be sometime beyond that before we see a vaccine available to the general population. As somebody who runs a company and has employees coming into work, do you think that how do you determine whether or not it's really and truly safe, even if you have this technology available without a vaccine, safe to have your workers coming into the office when there's so much uncertainty about how the disease is still transmitted and why it affects some people worse than others?
Yeah, I think that's a great question. We certainly have focused only on the essential workers related to the tasks that you referenced, to building ventilators and face shields and different efforts that are deemed essential by the state. Outside of that, we continue to follow for the remaining population of the community, the CDC guidelines, city and state regulations, those key 7 data points that New York City is tracking towards. So we will act just like any employer when it comes to the larger population. But we had to figure out a way to bring people back in a healthy and responsible manner, purely for those working on essential tasks in regards to the fight against COVID-19. And so that's why we put our best step forward using the technologists in our community to come up with a combination of operational procedures and technological solutions like Strong Arm Technologies product to bring people back in that manner.
All right. Well, fascinating work that you're doing. Thank you so much for sharing the progress with us. Sean Stewart, the CEO of New Lab. Good to have you here on the show. All right, coming up still ahead, SoftBank close to a deal to sell about $20 billion of stock in T-Mobile. We'll have more on that after this quick break. This is Bloomberg. Okay, we're on. SoftBank is close to a deal to sell about $20 billion of stock in T-Mobile. Bloomberg has learned that the Japanese firm is speeding up its efforts to raise cash. SoftBank just reported an almost $18 billion loss in its investment business. Joining us to discuss, Bloomberg's Sarah McBride, who's been covering this story. So, Sarah, first of all, why is SoftBank selling so much of T-Mobile?
Well, SoftBank needs cash. It needs it really badly in case it has to prop up some of its own assets, including in the Vision Fund. It reported really disappointing results on Monday, a $13 billion loss, and the Vision Fund is down $17.7 billion. So it's looking around for places it can find cash, and T-Mobile shares could be a good spot for it to do that.
Why does SoftBank have such a large stake in T-Mobile?
So almost 10 years ago, SoftBank bought a majority stake in Sprint for over $22 billion. And almost immediately, it started trying to merge Sprint and T-Mobile, and the Obama administration said no, so it had to shelve it. And then it went back, and 2 years ago, tried to get that deal going again, and it was looking shaky. There were all kinds of lawsuits. And then earlier this year, SoftBank got a win, and the government said that it could go ahead and do that merger. It finally got the merger done, and as a result, it now owns about a quarter of T-Mobile as a result of that original stake in Sprint. So that is a place where SoftBank has a rare win and a valuable one in comparison with investments like WeWork, which are now valued at $2.9 billion, down from $47 billion a year ago. So it's good that it has some assets that are doing okay.
Right. That WeWork drop in valuation, just totally staggering. SoftBank really needs this, but $20 billion is a lot of shares. Can SoftBank really get that done?
Well, the terms would have to be attractive enough to SoftBank that it could compensate for some of those weaknesses in the rest of its portfolio. There'd have to be enough buyers. But surprisingly, there does seem to be appetite out there for these large deals. Just a few days ago, PNC, which is a big bank, sold its stake in BlackRock for $13 billion. So even in today's tough markets, big deals like that can still squeak through. Sometimes there's a discount when you're selling such a large amount of stock to the stock price, but you can find buyers.
Now, more broadly, talk about how badly SoftBank needs this. I mean, they've made some bets that just turned out to not work out so well. WeWork being one of them. Uber,
right.
What they bought at ultimately, that still hasn't panned out for them.
Right. And earlier this week when SoftBank reported its results, Masayoshi Son, the CEO of SoftBank, even said it was foolish the way the company invested in WeWork. So they've just had a string of duds, and then coronavirus has come along and just added insult to injury. But they do have some strong candidates in their portfolio. For example, there's an e-commerce company called Coupang that seems to be doing well, but it's just still questionable whether they have enough wins to compensate for that string of duds. There's just been disaster after disaster.
All right, Bloomberg Sarah McBride, thank you so much for breaking that down for us and giving us the update. That does it for this edition of Bloomberg Technology. Stay with us. Bloomberg Daybreak Australia is next. This is Bloomberg.